The US stock market opened quietly on a Monday. The trading volume was small. Only banks and the high-tech giants propelled modest market moves. As a result, Wall Street indexes closed in the green. US top banks are under the spotlight today. Retail sales data is also on investors' radars. Analysts do not expect sharp price moves today because investors are anticipating the first corporate report from a high-tech giants. Yesterday, the benchmark stock indexes traded near their one-year highs, and the Nasdaq showed the best performance. The Dow Jones climbed by 76 points or 0.22%. The Nasdaq logged the strongest results and closed 0.93% up. The S&P 500 grew by 0.39% to close at 4,522 points. The major stock indexes traded flat in the New York pre-market. The S&P is expected to trade in the intraday corridor between 4,480 and 4,540 points. Wall Street indexes closed on a Monday with the gains amid growth in financial and high-tech stocks. The New York Empire State Manufacturing PMI was a pleasant surprise for investors. The index was beyond expectations in July. Besides, the report showed a decline in the prices and an increase in orders. Goldman Sachs eventually agreed on the soft landing and downgraded the likelihood of a recession in the next 12 months to 20% from a 25% in the previous forecasts. Apple shares also supported the stock indexes with a notable 1.73% growth. Morgan Stanley raised its iPhone maker's price target to $220 from $190, citing the company's upbeat outlook for India. Banking stocks also recovered from Friday's losses, with the S&P Banking Index up 1.76%. Growth in technology and the financial sectors has contributed to the S&P and Nasdaq's winning streak for 5 sessions. US stock index futures went down on Tuesday ahead of the retail sales data and the US housing market index. Prior to the release of the reports, the market absorbed remarks on inflation, and US Treasury Secretary Janet Yellen said that a cooling but not fluctuation in the labor market plays a leading role in a slowing inflation. Yellen also said that the United States has made good progress in reducing inflation, and she does not expect the economy to enter recession. IMF Managing Director Kristalina Georgieva delivered a speech to G20 finance ministers and central bankers. She said that inflation has finally begun to decline, although headline inflation is still too high and core inflation remains stubborn despite aggressive monetary tightening. While there is a progress, the work has not yet been done. Monetary policy should remain the same. A premature celebration could negate the gains made in the disinflation process. The retail sales data in the United States revealed expansion but did not match the forecast. US retail sales grew less than expected in June, though consumer spending remained robust, and this helped the US economy stay afloat in the second quarter. Retail sales rose by 0.2% last month, and the data for May has been upgraded to show sales growth of 0.5% instead of 0.3% as previously reported. Analysts had expected growth of 0.5%. Besides, core retail sales, which exclude cars, gasoline, building materials, and food services, increased by 0.6%, and the data reflected robust demand despite monetary tightening. In the corporate sector, Bank of America outperformed Wall Street estimates for second quarter earnings on Tuesday, and the bank reported earnings of 88 cents per share, beating analysts average expectations of 84 cents. We continue to see healthy U.S. economy that is growing at a slower pace with a robust labor market, the Bank of America CEO said, echoing comments from his colleagues. The bank's shares rose by almost 1% in the pre-market trading after the corporate earnings were released. Morgan Stanley shares appreciated by 1.1% ahead of their report for the second quarter, which is due out later. In addition, today, investors have to evaluate industrial production and business inventories, which may also affect market sentiment. In the currency market, the US dollar index is still hovering at around the 15-month low. It climbed a bit in the pre-market following a 0.01% uptick. The index is trading at 99.8 within the intraday corridor between 99.5 and 101.20. The greenback has firmly entered the red zone. The euro is taking advantage of the dollar's weakness and the ECB hawkish agenda and the scenario of the Fed's pause. If the Federal Reserve again makes a hawkish decision next week, the market could revise sentiment on the euro in favor of the US dollar. Meanwhile, investors take into account the soft landing and growing disinflation. In addition, major retail sales showed that consumer spending, which accounts for more than 2/3 of the US economy, continued to rise last quarter. With such fundamentals, before the Fed meeting, the dollar will remain under pressure, although it's possible that strong data on the labor market will help the index win back part of their losses. The Canadian dollar responded to the CPI from Canada, and the loonie had to give in to its American rival. The USD CAD pair inched up by 0.3% to trade at 1.3237. The instrument is likely to trade in the intraday corridor between 1.3210 and 1.3280. The annual rate of inflation in Canada is more than expected. The CPI plunged to 2.8% in June, the lowest level in 27 months. Analysts had projected a decline to 3% from 3.4% in May. The index edged up by 0.1% in months, also below the expected 0.3% growth. The core CPI, excluding food and energy prices, increased by 3.5% from 4% in May. Last week, the Bank of Canada said that it expects inflation to remain at around 3% for the next year before falling to a 2% target by mid-2025. But recent statistics suggest a revision. Potentially, this could give the hawkish Bank of Canada leverage to maneuver and pause the tightening cycle. Such prospects weakened the loonie. As for oil quotes, they showed modest gains on a Tuesday. Brent futures added 0.08%. WTI rose by 0.18%. Sentiment in the crypto market turned sour. Bitcoin lost 0.5% to trade at $29,800. Popular altcoins are trading mixed. Ethereum, Solana, Ripple, Cardano, Litecoin and Binance are wavering between gains of 3.4% and dips of 6%. Despite some good news, Gary Gensler continues to spoil the mood of investors. The head of the Securities and Exchange Commission expressed his disappointment with the court decision in the case against Ripple and its impact on retail investors. Although the Commission was unhappy with this part, they are still evaluating the court's decision with a further intention to challenge the ruling. On the other hand, the U.S. Securities and Exchange Commission has accepted for consideration an application for a second Bitcoin ETF. Earlier this month, Nasdaq resubmitted Valkyria for a BTC spot ETF with the Coinbase as an oversight partner. On July 17, the regulator adopted amendment to the listing and trading on Nasdaq. According to the official filing, the Commission initiated a public comment period within 21 days from the date it was filed with the Federal Register. Well, tomorrow, Coinbase CEO Brian Armstrong will meet privately with a panel of Democrats in the U.S. House of Representatives to discuss the regulation of digital assets, according to media reports. The intraday outlook for Bitcoin is not rosy. If the token declines below $29,600, it could retest the level of $29,000. Alternatively, the price could rebound to the area of $30,000 to $30,400. That's all for now. Hit the subscribe button and keep close tabs on the market developments with us. We are waiting for your questions and comments. See you online tomorrow.